Hello guys, what you up to? Hope everything's well. Yeah, I just wanted to do a quick update regarding the current price actions. So yeah, I'm gonna start kind of like how I actually do my ideology. I like to look at the daily first and really assess what's the dealio through there. I mean, it might look a little weird with the lines and stuff like that because I do kind of micromanage entry and all that kind of stuff. So bear with me regarding how the overall look and feel of this thing is. But yeah, I'm going to start with the MACD. So the MACD indicator is showing momentum waning, which is unfortunate uh, for just overall price. Now, obviously, this could convert. This could do a little fakeroo before it kind of continues down. I've been pretty open regarding my thoughts, and we'll probably see lower prices eventually. But yeah, so from the daily perspective, we did have a cross here, so that's nice. And this could still continue to the upside because usually what happens is it'll kind of just like wane and waver, have like weaker impulses down until it actually finds a more solid base, and then it just crosses the zero line. It crossed the zero line, but it hadn't done that in a while, and just the significance of these dumps were just, it was just carnage. Okay. Started here, and yeah, so it's been like 21 days of just carnage. We're having a little bit of a relief of a dead cat bounce, but at the end of the day, it's just not looking good in terms of overall price. Now, if you zoom in to other aspects, TSI is actually showing positivity. Okay, so as long as we have a daily close above 20.16, we can see price continue to the upside. And actually, buying at these levels is historically advantageous. So selling at these levels is advantageous on the daily. Buying here is advantageous. So like on a macro level, it's not bad if you're dollar cost averaging. But from my perspective, I like to zoom in and really kind of like fine tune entries and stuff like that. I don't get the exact bottoms or anything like that, but I like to get closer to the bottoms. And right now, I don't think we're truly at that level where we can truly say like, okay, we have a legit reversal. We don't have that yet. We're still kind of in price discovery, but to the downside. We had an entire 2 years of price discovery to the upside. So we're kind of now really trying to figure out where the hell this new bottom is going to be. So I'm keeping my eyes out for that. Nowhere to, in my opinion, nowhere to be found. So we do have, okay, this double MACD, which is appealing to the eye. We did have a buy signal around here. That doesn't mean it's completely confirmed. I mean, we had a buy signal here, right? So it's pretty choppy. And we had hidden bearish divergence on the daily that really just like took us to Goblin Town and actually broke below a key level at 22, 23K, which this is going to be resistance. Sideways right now for the fast moving average. Macro, we are kind of, you know, just rolling a little bit to the upside. So that's promising in regards to maintaining a potential range. So RSI is a fast mover. It's a little bit more easy to chart and easier to find trend. So with the RSI, I'm gonna do a little TA like that, a little line charting. So here, until we break this downward resistance, which is not it's literally a month away. Worst case scenario, it's like a month away. So we still have price discovery to the downside, in my opinion, for at least another month. At least. Well, no. Sorry. At most, because we could do something like this, right? We can boop, get rejected, boop, and then finally, So realistically, worst case scenario, that cross is like in August. 54 days, I would say, but frankly, I wouldn't say more than a month uh, from the RSI perspective on the daily chart. Now, you could argue that we had a breakout right here. That's true, but just the fact that this right here double tested, I would say it's actually more drawn out. So from the RSI perspective, there's still a lot more to go in regards to breaking bearish trend and going sideways. Because once that's broken, we're just going to be going sideways for a while. And so it's safer to dollar cost average in those times. It's safer to, actually do like longer term investment moves. Right now we're just heading down, so shorting is kind of like in fashion, or is aimlessly dollar cost averaging, which is fine, you can do that, but also it's just not conducive to value. Anyway, so this is a TMA, which is like an RSI mixed. I kind of like this, not gonna lie. I want to show you. We do have kind of like an interesting setup here. We have an obvious high, low, then we got like, this is considered class B. Considered class B divergence on the bullish side. So that to me is intriguing. Now it doesn't indicate a bottom, it just indicates that like these carnage moves of 40% down, that's in the past. So I don't see any intense moves like that happening, thankfully. So it's not confirmed yet, because usually you'll see like a bullish tag, but from the looks of this, we would need a gargantuan dump to the downside to like not confirm it, is what I'm kind of like playing at. But anyway, I digress. Okay, so that's on the daily chart. I want to zoom more in. This is where I actually enjoy trading, or I enjoy actual market analysis, because this is more of like the fast moving stuff, and it's more like intraday, 2-3 day kind of market structure definitions. Okay, let me start with the MACD. So what's going on with the MACD here? Okay, the MACD is actually waning negative momentum. And now that we're kind of like zoomed more into the chart here, it actually makes a little bit more sense. So we kind of have a bounce at 19.8, and last video I showed you guys that there was some definition that, yeah, there could be a reaction in this level, this particular zone. And so far it has. I don't like the EMAs. Frankly, I don't like, in terms of like positive, if I was a bull, I wouldn't like what I'm looking at, because prices below the EMAs, wicks to the upside every time it tries to cross the 9. I'm going to turn off the candles. Momentum is to the downside. There was a cross right here. EMAs are turning red. It's just not conducive to good overall price action. So I wouldn't necessarily be opening up fresh longs at this point. Now, what's intriguing me is on the Heikin-Ashi candles, which is where I prefer to see my support and resistance indicator. You'll see it. It's right here. I'm just gonna like circle it for you all because it's kind of covered, and it's hilarious because it's right where I did the line, this teal line. It's right there, Now I'm going to turn it on and off and you'll probably see it kind of, you see that? There you go. That is support. That is intriguing to me, I'm not going to lie. I'm not doing anything about it, TBH, because I don't trust it. At least not yet. I want to see more candles close um, above 19.8 before I do anything. Frankly, this last candle, I'm going to take off Heikinashi. This last candle confirmed the 9 EMA, the yellow line, as resistance. So I don't really like that. But it's intriguing that there is a support around this zone. There are buyers that are stepping in and they are keeping the price up. So that's kind of intriguing to see. Now, I'd prefer to see it right here. You know what I mean? I'd rather see a support line kind of closer to this because that would kind of be a better indication of a true higher low. But we just haven't had that yet. So let me go to the 4-hour here and go back to my other indicators. So the RSIs of, so this is how I structure it. I have my fast moving indicators up here. I have my middle range indicator here, and then I have my lagging slow moving indicators on the bottom. So it's like fast, middle, slow. Okay, so then let's go to the MACD. Slow moving averages. Slow moving averages kind of showing some confirmation that yeah, buyers are kind of stepping in. There we could see some action up here in these levels in the future. That's to be determined. But we also have things on the TSI where yeah, it's just like for sure red. We have redness right here, so that's not good. Yeah, as long as price continues to fall below 20.214, then yeah, we're looking at some red days, red candles, red hours, if you will. So usually when price pinches on the double MACD, then that's like more so of a buy signal. We just haven't had that yet. It's damn near close, so maybe like in the next 8 hours, 4 hours, we'll probably see something like this. But like I said before in the past, the 9 EMA is confirmed resistance, so it's going to be chop city. And then when we hit this level, whew, I truly think shorts are going to like open up and just like bring this baby all the way down to 18.9. Just a theory. Just a theory. This is kind of like what I'm expecting. And then, or if there's like some, crazy news event where, I don't know, like freaking England bought Bitcoin, yeah, but I don't see that happening. I more so see something like this and then maybe a more structured lower high happening at some point, or just a flat out break of previous support around this zone. This is kind of like what's happening here? There you go. Let me change that color to green. Yeah. Well, if this breaks right here, we can see like that. I can definitely see that happening right here. Then RSI, 4-hour. Whoops. Confirming the slow moving average, because this white line's a slow moving average on the RSI. This green is a fast moving average. So far, it's a bearish control zone. I know I have it as like the teal color as like my quote unquote buy color, but really like the RSI is different. When the indicator, the RSI is in this zone, actually bears are in control. This is technically the bearish control zone, and then this is the bullish control zone. I have it inverted, but yeah, it's just not good. I like to see crosses of the 34, like a cross up on the 34. which is right here. But we did have a cross up, but it hasn't sustained yet, so that's kind of interesting. Has crossed the 34, but can it bounce? That's the question. There is support, but it just takes one fat finger sell to really invalidate this new support line. We gotta see. We gotta see. Because, I mean, if you zoom out, it can come all the way down. It can go further. Let's be real. It could go further. But I like that it did cross the 34. It has an opportunity to cross. It's not there yet. TBH. To be determined as well. Now the TMI went from green to orange, back to orange. And honestly, this is pretty telling to me. This is a slow moving average. Usually when it breaks below the slow moving average, it likes to hang around here. So that I could expect the TMA kind of like hanging out until it does something, but that's just conjecture at this point. But yeah, to be honest, the TSI is pretty accurate. Downside still on a macro level. So now let's zoom into the 1 hour. Okay. 1 hour, let's go. All right. So the 1 hour is still showing downside. Whoops. Yeah, confirmation. Well, let me turn off the. Interesting. Yeah, we do have a cross. The MACD did cross above the slow moving average, which is bullish, which is happening. Intriguing. Defined support, that's good. Now on the 1 hour is a little different. So here we have had, it's very minute, but we have had confirmation of the money flow making a higher low. It's very minute, but that's a good sign. If you're like doing a couple, like a swing trade, you know, for a few hours, you could realistically make like 2%. Not financial advice, but that's not bad. I like to look at the 37-minute time frame where it's a faster move. It's basically, I use it, it's a Fibonacci number, the 37-minute. It's a custom one. You have to have the TradingView Pro account in order to like make your own custom numbers. But yeah, I made this one. It's a Fibonacci number. It's used with traditional traders and stuff like that. Usually it's in conjunction with the RSI. So essentially, you wait for the RSI to cross up or down on the 0 line, which is right here. Well, it's not the 0 line, it's actually the 50. The center line, I should have said that, the center line, which is right here. There are fake outs, right? So you have to have a tight stop, but anywho, what traditional traders will do with the 37-minute time frame, it front runs the 1 hour. So essentially, like whatever this shows, this will eventually show. It's pretty crazy. It's a Fibonacci sequence. But yeah, so far, if you do charting or whatever like that, it's not looking too hot for the RSI. It has an opportunity. Obviously, there's still 3 minutes left on the clock. Yeah, so yeah, but so far price is still closing above 20, and it looks like it wants to give it a shot still, so that's rather intriguing. But yeah, TSI is still showing as long as price is below 20,048, which is very, very close. 20,048, then yeah, price is still heading to the downside. But TSI did cross back here. Okay, TSI crossed right here. So that's intriguing. There is this downward sloping resistance happening. Hidden bearish divergence confirmed in the 37 minutes, still playing out. It's probably pretty much done. I don't know. Let me go to the 37 actually to see what's the dealio, yo. Yeah, crossed the zero line. Then got shorts. Some bears are confirming this as resistance to them, so that's why they're closing. I mean, they're opening shorts. Looks like we actually, at this current juncture, have a sell signal, which is intriguing. That's new. We have a sell signal. For perspective, last sell signal up in these levels led to this particular dump-ola, which was at the lows, candle close, 3.8%. So I don't know exactly where this candle will close. 3.8%. Argue maybe around here. That would make sense. Not confirmed. Candles need to close. Also, keep in mind on the MACD, anything in the zero line, this is like fake out zones. Just for consistency, like MACD. I don't really like to look at the lines here. I actually like to look at the slopes. To be honest, like what I like to do sometimes is I'll turn off the signal lines. The dots, that's fine. But actually I like looking at the slopes more so than the actual lines, because this actually really cleans up what you're looking at. So for example, this shows divergence right here. And if you look at bullish divergence to be exact, which shows right here. Obviously there's some wicks, you have a 5% stop loss. So, all the way down there. Some people like to use 5%. I like to use 5 or 10% stop losses, frankly, if I'm like low leverage or even like no leverage. But yeah, so if you opened up a candle close right here, which is basically around this zone, and you just held it to the 20.2, that's a 1% move. It's not bad. But yeah, like it was a weak move, right? You're going against the grain, by the way. That's something you don't want to do. But if you have like little signals like that and you're experienced, you know exactly what you're doing, you know how to read the indicators, then yes, like there are some opportunities to go against the grain. It's just like not ideal. But yeah, anywho, back to the 1 hour. So far, bulls are holding this line. There is a support line. It's in a key zone, which is interesting. So what I forgot to mention earlier, I think it was like late last night. This was what, a couple hours ago. Yeah, it's like a day and a half ago. There was this bear flag. So usually what happens with bear flags is at the point of breakout, this usually becomes resistance, which actually aligns with the 20.255, but it's a little higher now. So it's right here. A candle close at 20.266. So this is technically confirmed resistance. So I could turn this into red. Okay. Now, doesn't mean that it's going to be resistance forever, but after bearish breakouts like this is just a line in the sand to be aware of. So we're getting into tighter and tighter zones. I don't know if exactly how long you've been tracking this with me, but this zone is becoming more defined, which is great because how it was initially was just like this box, you know, and then we had like this box, and then it like became more defined. Okay, we have like support here, then we have like, you know, resistance here, then we have resistance here, you know, then we have support, you know, around here. So like as time goes on, we're having more price action within this particular range, which is constructive overall for the macro charts. So I'm talking like, you know, the 3-day, or talking like the weekly. We're actually having some history, which is, oh, sorry, which is great because we need that history for continuation and like, you know, for just overall understanding of like where this market's going, which is great. So anyway, from a macro perspective, this is phenomenal. Going down to it, same old, still in the broadening descending wedge, and some supports popping up, phenomenal. But I want to see a legit candle close breakout above. Like theoretically, this could happen, or conversely, this could happen, or whatever, right? So it's just all about scenarios, probabilities. From the daily perspective, I've already shown you. We have hidden bearish divergence on the 1 hour. Usually hidden bearish divergences are weaker than traditional bearish divergences, so that's why I'm not like, oh, open up a short right now. Fuck no. Not you don't want to short resistance. I'm sorry, you don't want to short support. You want a long support, and you want a short resistance. So let me show you a good example in regards to like the indicators that I use. So you had a, you know, bearish candle breakout right around here. You had a 1 hour that unsuccessfully closed. So in a downtrend, by the way, confirming the 9 as resistance. You want to short this. Not only that, you had a bear flag confirmation, so you could have held it longer. Excuse me. Now we have support right here. So support, there's people, you know, opening up longs here. Obviously, the 21 EMA is acting at resistance, and you're in a downtrend, so, you know, wise people took profits already. You know, taking profits around this like near this wick was super wise. Like I said before, had a previous pretty clear cut bear flag. And like I said before, when you have a bear flag and then you have price trying to recover, usually where the candle broke out to the downside, that's usually confirmed as resistance, and that's literally what happened. Price had like a bullish engulfing candle for like a hot minute, and then it just like went right back down. Had another candle close, wick above, couldn't you know, seal the deal. Now we're back below. Yeah, so we're kind of at an inflection point. We'll see what happens. But so far, oh, is it getting invalidated already? Ugh. Yeah, doesn't look too hot. But yeah, I don't know if I've covered this, but I kind of want to see this kind of just bowl out, and if I can watch this like hill, I'm sorry, this valley make a lower valley or like a higher valley than this one, that would be a trigger wave. On trigger waves, you have like pretty nice, conducive, easy to read moves and confirm confirmations. Now, conversely, if this hill doesn't, like, if it's not lower, if it's equal to than this one, then just don't even consider a long. But anyway, had to give you both scenarios more detailed. Hopefully the strategy, or like my perception of the strategies, gives you a better light as to where the market's going. But yeah, I hope this helps, and have a great rest of the night. Cheers.